Welcome, everybody. This is Software Equity Group's third Coffee with SEG, and I'm really excited about our session today. Maybe before we get going, so Tim, I'd like to welcome you to our session.
Sorry, I don't have coffee.
Water! I think you're a few hours ahead of me.
Yeah, I've already been coffeeed out, so I'm glad to be here.
Well, thank you very much. So this is a session that I'm really excited about. Tim is the CEO of SaasOptics. This session strikes very dear to my heart in that we at Software Equity Group, we are never surprised at the amount of information we're able to glean from a client's data, customer data, revenue data, etc., that was unknown to them. And the information we get back often is, wow, I wish I would have known that. This tool, this application that you provide to the marketplace is amazingly valuable. And I kind of liken it to, if you had an orange tree, why would you pick the fruit at the top of the tree when there's a lot of fruit on another tree down at the bottom? And it is interesting to me, Tim. I want to show something real quick, and then we'll go ahead and get into this. So let me share something with you. Can you see my screen?
Yes.
Okay, so this is ugly and old, but this is a presentation I did many years ago. And the concept was, this is what you see on your car. You're totally blind. And it is akin to a company not understanding their data. And then my next slide that I would present was this one. We got 4 gauges here, right? And from these 4 gauges, I can tell you that this vehicle is now going 60 miles an hour. It's got plenty of gas. But I also see 2 things that are interesting from these 4 simple pieces of information. It's redlining. It's at near 6,000 RPM. And on top of that, its temperature is extremely high. What this simple piece of information is telling me is that I've got a car that is likely running in a gear that is too low. Shift to a higher gear and be on your way. If you can't do that, slow down or stop and add another gear to your vehicle so you can continue on your way. And so many of our clients don't understand the simple concept of understanding data allows you to operate better and more efficiently, much like the data and information we get from a simple example like this. So I'm going to stop there. I'm going to let you give an introduction, and then we'll go ahead and get into our discussion today.
Great. That sounds great. Well, you can't control what you can't measure, for sure. And we're big believers in information. But yeah, at SaasOptics, it's real simple. You're really instrumenting the business for growth and measuring everything that is revenue with your customers and giving you the ability to slice and dice that information, not from a rear view mirror, not from your, P&L or balance sheet. That's all rear view mirror information. What we're all about is the momentum of your business and forward-looking information that can guide you to where, like you said, where the fruit is. And we're all about giving our customers the ability to, in real time, be able to analyze their business and understand what's profitable, what isn't, and where should you invest more in, and where should you let up. So.
Yep. And let's go back to that fruit analogy example. There's a concept that we use when we're looking at the performance of businesses, that's unit economics and payback, right? How much does it cost to win that per unit, that new customer? You could say, how much does it cost, whether time or effort, to pick that piece of fruit that's up at the top of the tree? And so what we'll look at often is cohorts. We'll look at information by groups. Maybe it's a segment by vertical or by market size. And I'll say to a client, or a prospect, you know that your payback period is 7 months on this tree, and your payback period on this tree is 14 months. Now, granted, there may be a strategic reason why you want to go after this other one for long-term benefit, but assuming you have plenty of runway and opportunity with this 7-month payback period, why are you taking resources and putting them over here? And the common feedback I get is, oh, I had no idea. I just don't look at it that way. And it's just, for me, it's like, oh my goodness, like this is an opportunity to make real money. And so they're losing out on a terrific opportunity that you can help them with. And so I'm curious, what are a couple of your favorite customer success stories that you have of where people have used your product?
Sure. Yeah, there are several for sure. Without using a tool, like you said, you're blind. I kind of liken it to, finding landmines on a battlefield, or opportunities on the battlefield. You can learn a lot about your business by driving deep into these cohorts, as you said. Success stories we hear about from customers, finding trends in their business, whether it be finding industry segments that are unprofitable or profitable products, certain product segments that they deliver to customers, or certain product plans that are in place, or even identifying unprofitable geographies, for example. The ability to slice and dice these cohorts and have the context be whatever attribute that is important to your business is really, really powerful. We call those either churn profiles or CAC profiles, where you can drive into your customer data by, again, whatever segment is important. Usually we see industry segments, and in this day and age, with the crisis, I mean, being able to get into your, customer database and ARR by industry segment is really valuable right now. But looking at these cohorts by industry or by revenue size segments, SMB versus enterprise, to see how your product performs is important. Geographies, as we mentioned, or any other attributes that is unique to your solution or customer base can be, you basically can run a cohort against that particular attribute or series of attributes. So there isn't any special magic bullet that we see all the time within the customer base, but it's really that flexibility to be able to ask what's possible and get the answers that you need.
Yeah, and I think one of the things that you've said to me often is that people use it at a point in time where it may be time to raise capital, or maybe it's time to talk to someone like myself that's an M&A advisor. And I just, that is the wrong, it's great, thank you very much, you would make my life easier, but that's the wrong time. It's when you're running and you're operating your business. And again, you brought up, you see it as landmines. I think you can see it as a map, right?
Sure.
It's a map that can be used for a customer success department to be able to say, how can I use this information to be able to maintain the best retention levels that I can, whether it's by cohort or just looking at the general data. Similarly speaking, giving information to the sales department so that the sales department can understand really where are the best unit economics and return on my time and money that's been invested. We take that to where we are today from a market standpoint, and it's even that much more important. You just briefly touched on it, but why is it so important in the current market to be using a product like this, even more so than it was before?
Yeah, there's obviously several reasons. The first I mentioned briefly is, just the ability to segment your ARR by customer and by industry segment, to be able to isolate hospitality, travel, restaurant businesses, and get visibility into potential impact of your customers, and looking at customer renewals, through that industry lens is really important. Cash has always been king, but it's even more important in this environment. So, how can you collect cash sooner, faster? What is your collections capability like? You can also, on the fly, be able to do things our customers can with our platform is, briefly turn on the ability to pay your invoices with credit cards. We have a policy today where, we do annual agreements paid up front. So those invoices are quite high and we don't accept credit card payments. So, to help facilitate, cash in the door, we're doing that on certain thresholds and parameters for customers to pay. And it also gives your customer, another 30 days of float. So we also find, almost 95% of the time when we implement a solution like ours is they find missing invoices and missing renewals that were never invoiced. Sometimes it's very substantial. I know $160,000, was an example that we uncovered a few months ago. It's, maybe not as dramatic as that all the time, but, every invoice is definitely sacred. And you want to be billing everybody that you can, and especially in this environment.
100% agree with that. Hey, so one of the things that you talked to me about before that I frankly had never thought of, but I think it's just really insightful, is we talked about segmentation, but segmenting by sales rep. Now that's interesting. I've had plenty of examples over the years where I've looked at customer data and I'll ask my client, I'll say, well, why are you going after that market? And they said, well, it's because it's attractive. And I'll look back and say, yeah, but you're actually losing money. It just doesn't make any sense. I never looked at it that way. From a sales perspective, looking at the salesperson, if they're selling to companies that are going to attrit versus another salesperson who's selling to companies that stick, yeah, they may be driving more ARR, but what's the value of that ARR? So elaborate a little more on that for me, because that's super.
It's really great. I haven't actually, seen a lot of customers, implement this to the full extent, maybe half implemented, where they pay their sales reps on renewals is probably as far as we've seen. But the concept that I like to talk about is, we've been conditioned, as sales professionals to grade our top sales performers, by percentage of how much over quota they are. But if you look at a cohort, and what if your top sales performer churns the most business? It's really a problem when you look at it from that perspective. Or you could also look at it from, failed implementations are the biggest reasons customers churn. What if you looked at a cohort by the implementation consultant that implemented that customer?
Oh, wow.
You just have different views into the business that can inform you. We typically use those as training, triggers for retraining employees to, get that back, or to inform your ideal customer profile to, change an attribute or what have you from, one, selling to one industry to keeping with another. So it's really important to be able to see those different perspectives with real data.
Absolutely. So, the purpose for why we wanted to start doing these types of sessions was to give back to SaaS operators today. What can we do at Software Equity Group? Not any healthcare providers or any of that type of stuff. And so this really was the impetus for why I wanted us to start doing this. And so I think what you guys have built is extremely valuable to that community, and wonderful if it's SaasOptics. If it's not, then something in order to guide yourself so that you can operate more effectively and look at the windshield instead of the rearview mirror. We're at the end of our session here. I have to keep these brief, but I'd like to ask you one more question. And that question, Tim, is, what is the one or two pieces of advice that you'd like to give to your fellow SaaS peers, CEO peers that are operating companies today?
Yeah, it's a great question. I mean, I think the biggest is don't take on FinOps debt. I mean, we've heard of technical debt building up and compromising. What I like to talk about is, SaaS businesses and subscription businesses are pretty much valued on their primary asset, which is their ARR and their customer base. So multiple of ARR is typically the base, and you are awarded premiums on that, on your valuation, with things like, net revenue retention, above 110, 120%. And understanding how you can move the bar with your valuation. So if you are not managing your customer ARR in a very serious way, and you're still using spreadsheets or manual processes to link sales and finance teams together, or what we see a lot is different departments among the business having their own set of SaaS metrics that they deal with. The customer success team has a different churn number than the sales team, and so on, and finance has yet another one. So there's no real system of record, or as we like to say, source of truth, that everybody's operating off the same sheet of music. So the net is, the earlier you can adopt these solutions, and we've orchestrated a pricing plan that enables us to go way down market and allow customers to adopt such a robust solution very early on in their life cycle. Get a subscription management platform in sooner rather than later, and be able to gain efficiency, control, and the insights you need into your business, and bring more credibility and confidence to your potential investors, and, as in your business, acquirers. And then you can not only tell your growth story better, but you can now have the ability to tell your financial story with greater confidence.
Yeah. Well, and I'm going to take it even a step back. Manage through difficult times.
Yeah.
Better, and drive more profitability, even if you don't ever want to raise money, or you don't want to sell your business. Drive more money, more profits, reinvest, grow the business, whatever it may be, but be more efficient. So this is, I'm very passionate about this, because we spend a lot of time in this data. So I really am very grateful, Tim, for you for taking the time with us today. I hope people really do listen and incorporate some of this into their operation. So Tim, thank you very much. Yeah.
Cheers.
Thanks
water. Again for having me.
My pleasure. Thank you so much.
Take care. Stay safe.
You too.